Hi everyone, this is Owen from MTI Equipment. If you've been considering buying a new piece of equipment, you may have heard of the Section 179 deduction and the 100% bonus depreciation. These have been around for a long time, but have had additional traction and have been a big win for contractors since 2017 in the Tax Cut and Jobs Act. But with the new adjustments to the OBBA, the One Big Beautiful Act, a lot of customers and contractors have been wondering what are these adjustments and how they really affect my tax bill. And so I've invited Mike Kelly onto our video today, and he's been kind enough to help us out. He's from Kerkering in Barbario, and he's a tax advisor, and he's going to give us a simple breakdown to see how this might affect any purchases that you have and your upcoming tax bill. Thank you so much for joining us, Mike.
Absolutely happy to be here. Well, thank you, Owen. Like Owen said, my name is Mike Kelly. I'm a tax supervisor here at Kirker and Barbario. We are the largest independently owned accounting firm on Florida's West Coast. We do everything from tax consulting, audit, to anything in state and local tax, construction, outsourced accounting, healthcare, and estate and trust planning. We don't just do compliance here. Obviously, we love to provide advisory and strategic planning to kind of help our clients and just meet their overall goals with confidence. A little bit about me specifically. I'm a state and local tax guy. Obviously, I need to know federal concepts in order to do state and local tax. But like Owen said, I think this One Big Beautiful Act has really brought a lot of attention to bonus depreciation in Section 179 and how these can impact both our friends over at MTI as well as, all of our clients and customers. Yeah, that's a little bit about me.
Yeah, thank you. And so you're right here in kind of the Sarasota area.
Yeah, so yep, we have offices Sarasota, Tampa, and Lincoln Ranch. I do work mainly out of our Sarasota office.
Nice. So we've actually been working with Mike for a long time and trusted their guidance, and so we appreciate them being able to share this also with you. So, Mike, let's just get started. Can you break down the Section 179 deduction and how does that work?
Sure thing, yeah. Section 179, it's a section of the IRS code, which granted is where it gets its name from. And it allows businesses to deduct the full purchase price of qualifying equipment in the year that it's placed in service. So typically, if you were to buy a piece of equipment, for example, you would depreciate that equipment over its useful life, right? And the IRS gives code, use makers deductions over 5, 7, 10 years, whatever the case may be. Whereas you take this Section 179 deduction, it allows you to take 100% of that cost in the year it's placed in service. There is limitations to this. For 2025, the limit was increased to $2.5 million. This was also in the One Big Beautiful Bill Act, and it pretty much doubled from 2024, where it was 1.22 million, I believe. Also important to note that it does get phased out. So if they start to get over that $4 million mark, it gets reduced dollar for dollar by the amount that's over that $4 million mark. So, for example, if you had 6.5 million in purchases, your 179 deduction would completely be phased out.
Yeah, understood. And so that 4 point whatever million phase out, is that doubled from what it was in 2024 as well?
The format, yes, I believe it
The-
was right around $2 million mark. Yep. So they
Okay.
doubled that as well.
Okay.
Great. I mean, 179 is one of those things. It was kind of brought around to, help small, medium-sized companies kind of get that benefit up front, reduce the tax bill, increase cash flow, that sort of thing.
Yeah. And so with the Section 179 deduction, can contractors utilize that? Does that only apply to new equipment? Or if somebody was to buy one of our pieces, like a used horizontal directional drill or a vacuum excavator or something like that, could they, as long as that was put into purchase this year, would they be able to utilize that for used equipment as well?
Absolutely. That's a great question, Owen. So yeah, so with 179, and this goes for bonus depreciation as well, they do apply to used property, right? As long as it's tangible property, it qualifies. And as long as it was new to the business, right? So if there's some sort of related party transaction that could change things, but yes, to answer your question, absolutely. They can definitely take advantage of this deduction.
Awesome. Thank you very much. And so that kind of leads us into my next question. We've heard about the 100% bonus depreciation. How does this differ and or work together with the Section 179 deduction?
Absolutely. A bit of a loaded question, but I'll
Yeah,
kind of try to start off with just explaining bonus from a real high level perspective here. So bonus depreciation, it's been around a long time. I think it got put in 2002, 2003, somewhere around there. And again, it's a tax incentive that allows these businesses to immediately deduct a significant percentage of the purchase price, right, of these eligible assets. With that being said, One Big Beautiful Bill Act brought back the 100% bonus depreciation, which was also a part of the Tax Cuts and Jobs Act. But in the Tax Cuts and Jobs Act, that 100% was really only for years 2018 through 22, and then it was supposed to, be reduced 20% each year until it was completely phased out, really. So now that it's been brought back, important to note, it was reinstated for 2025, but it's for assets that were placed in service after January 19th. So might have to tell some of your customers and stuff to be tentative about that date. Obviously, we're past that date now, so anything purchased now is going to be eligible for that 100% bonus. Um, and then, now that we've kind of gone through bonus and 179, I know you had asked about some of the differences, so I can compare and contrast a little bit if you'd
sure.
like.
Yeah,
Okay. Yeah, so bonus, I think we're going to start to see a lot more of, similar to 2018 when 100% bonus came back. Basically, I mean, I think we're going to see a lot of our clients use Section 179 a little bit less because bonus, you'll kind of learn, has a little bit less limitations on it. There's
okay.
no fixed annual dollar cap to it. It can be used to create a net loss, which 179 can't do, which is another big incentive there. It's automatic for all eligible assets, which usually are just, it could be tangible property with a recovery life of 20 years or less. So in the example of used equipment, that's always going to have a, shelf life of less than 20 years. So it would
Yeah.
always be eligible for the bonus depreciation. How that kind of differs from 179 is, as we talked about, you're capped out, right? Once you reach the 2.5 million, that's your deduction. And then even if you were to reach that $4 million mark, it actually starts to cut into your deduction a little bit, right? You start to get phased out there. So, I mean, with taxable income limit is another big issue. So like I said, bonus can bring you into a loss position, whereas 179, the deduction's limited, right? So it's limited to the business's annual taxable income. So if you, for example, have $100,000 of, net taxable income at the end of the year, and you had $200,000 of property that you had purchased that year,
Hmm.
basically you'd only be able to 179 $100,000 of that, right?
Gotcha.
Because it wouldn't be able to take you into that negative. Um, which is also a great segue of, how we've seen 179 and bonus be used together.
Yeah.
A tax planning strategy that was used a lot in the prior years was we typically cap out Section 179, and then bonus depreciation can get kicked in, right, for any remaining costs of those qualifying assets.
Okay. So you can utilize them together.
You can use them both. Yep, yep.
Yep.
179 would have to get used first, and then you can kick into your bonus depreciation as well.
Gotcha.
I don't know now that 100% bonus is back. I don't know if we'll see as much of that. That was something we'd see more when, bonus wasn't because now that bonus is 100, 179, we know is 100%, right? They
Right.
kind of act in similar ways. It's just 179 has those additional limitations.
Okay. So for somebody thinking about buying equipment before the year end, when should they start to talk to their accountant and consider these tax strategies? And what are their stipulations? Like I think we already mentioned they would have to put that piece of equipment into work before the end of the year, correct?
Correct. Yep, that is correct. So yeah, so all of this kind of starts is when that piece of equipment is placed into service, right? So I think to answer the first part of your question, I would recommend now. I think, this time of year, we're past all the deadlines as accountants. So we're ready to answer your questions. We're ready to do tax planning, all that sort of stuff. So yeah, if you're considering, purchasing some equipment, now's the time to do it. You definitely want to get it placed in service, take advantage of this 100% bonus depreciation or Section 179. Because yeah, at the end of the day, you're gonna lower your tax bill, increase your cash flow, and that's another thing I didn't really touch on, Owen, is it's kind of interesting is, you can go out, say you bought a qualified vehicle, right? And you want to take 100% bonus on it. And Granted, it meets all the qualifications in order to get 100% bonus. I mean, typically, a customer could, buy this vehicle. They could finance the entire thing, right? Say they put no money down, but then they're getting 100% bonus depreciation. So they're getting a full deduction for an asset that they didn't put any cash down for, right? So
Yeah.
there's a lot of planning that goes into it. I mean, granted, we'd have to look at the loan, the terms of the loan, and see whether it's beneficial or not. But I think you see where I'm getting at here is, I mean, there's a lot of tax incentives that can kind of help boost cash flow a little bit. Yeah, I mean, I will mention too, I don't think I mentioned this before, state taxes could come into play. Not all states conform to federal bonus depreciation, so that's another aspect that you'll want to get with your advisor on. And yeah, I think
How does, since you mentioned that, our two biggest, at least domestic markets are Florida and Texas. Anything special about those two markets?
yeah, so I mean, it depends on, the entity type, right? Whether it's an
Okay.
S partnership corporation. So it is all different.
Yep.
But I guess what I would recommend there is, have your clients or customers that have questions there, reach out to us and we can help address those. I don't want to dive too much into what,
Yeah.
MTI's details. So yeah, but anyways, yeah, there are state tax considerations. So and happy to answer any questions.
Mike, if you could just reiterate, what are the kind of the important dates that contractors are going to have to pay attention to in the year 2025?
Sure thing. So yeah, so with this OB3A or One Big Beautiful Bill Act, this was all enacted on January 19th, 2025, right? So there is going to be a little bit of a gap between, January 1 and January 18th, where technically 100% bonus is not going to be the assets that are placed in service between in those 18 days are not going to be eligible for 100% bonus. That's not to say that a company can't 179 them, right? If they're eligible. So there will be some tax planning. I would definitely get with your advisor and they'll kind of do what they can to ensure, the most tax benefit there.
That's fantastic. Yeah, thank you very much. Mike, thank you so much. That was great. I really appreciate you being able to break that down for us and how it particularly applies to our contractors. If you have been looking to or considering buying a new piece of equipment before the end of the year to help affect your tax bill, now is the time to reach out to KB. Mike is happy to answer your questions or reach out to your accountant or tax advisor and start to plan and implement that. And if you're looking for options, please go to mtiequipment.com and check out our current inventory. We have a range of things, and we can definitely get you set up. We're ready to help you with financing and whatever you need. Again, Mike, thank you so much for your time and coordinating this, and we appreciate it.
Absolutely. Thanks for having me. Yeah, for those of you that need to, reach out, you can reach me at mkelly@kbgrp.com. I'll send out all the details with Owen. Yeah, and with any tax provision, obviously every situation's a little unique. So yeah, I would just recommend consulting your tax professional or reaching out to us here at KB. We're happy to answer any questions you guys might have. So thank you, Owen, and thank you all.
Awesome. Thank you so much, Mike.